The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Let's get you caught up on some of the international news out there.
Of course, Israel-Iran air war has entered the second week as Europe continues to push for diplomacy.
We also saw Japan's core inflation hit a two-year high, and this, of course, came after the Bank of Japan kept its rate hike bets alive.
Yeah, Japan's core inflation hit more than a two-year high in May, exceeding the central bank's 2% target for well over 3 years.
New Zealand Prime Minister Christopher Luxon has met with China's President Xi Jinping, the pair discussing the role of business, education and science to help boost relations between the two countries.
And China's rare earth magnet shipments have halved in May because of those export curbs, tumbling to their lowest level in more than 5 years.
All right, let's have a look at some of the technicals now, particularly when it comes to currencies. And Steve Copeland, Skanda FX director, joins us now. Steve, you know, there's been so much noise about what's happening with the dollar amid whether or not we fade US exceptionalism. Then, of course, the uncertainty in the Middle East puts it back to the fore again. What's the dollar index telling you?
Thanks a lot for having me this afternoon. Quite interesting the way the dollar is behaving. We've gone from tariff threats to Middle East war extension. So we've seen a bit of buyback in the dollar. We've seen bid on the dollar. But if you look at the macro picture, the dollar is losing its strength against most currencies. But in saying that, look, in the last 24 to 48 hours, or since since the start of the week, it has been bought by overseas traders purely as a demand for safe haven.
So where do you anticipate the US dollar will go if you're looking at the technicals?
Good question. I wish I could answer that question easily. Look, by the way the dollar is behaving, once the Middle East tensions, let's say they come to a halt, we'll come back to the same question where the tariff sits. And I'm assuming if China and US manage to, iron out their tariff war and come up to some sort of solution, the long-term trend for the dollar is it probably is expected to decline even further from here. And that's because President Trump has clearly said that he wants to see the next Fed president who is going to be more accommodative of his policy. So we probably will have someone who is going to replace Jerome Powell sitting in the chair, who's going to be either ultra dovish or at least dovish enough to execute more rate cuts.
All right, Steve, let's have a look then at what we've been seeing with our currency as well. The Aussie hit fairly hard, falling below 65 cents.
Yeah, the Aussie dollar, obviously, it is considered as a risk proxy for China, and we've seen that in the past couple of days, the sentiment has been trading in a very narrow range. It's been trying to break above that 65.50 handle, but without any conviction. We had the jobs data that came on for the local economy yesterday. Unemployment was steady at 4.1%. Not a huge data for RBA watchers. I would say it was more of a bit of a disappointment for most RBA watchers. And in saying that, look, I don't think the RBA is going to be in any sort of hurry to go and cut rates heaps. Nevertheless, market expectations are that there's 80% chance that another 25 basis points of cuts is coming in from the RBA on 8th of July.
Okay, so we will be watching the risk impact on the Aussie then in the week to come. It's pretty hard to really know where this is going to end. When you are looking at the euro, interesting because, of course, we've got the Europeans really pushing for diplomacy in the Middle East. We've got the Europeans potentially on hold as far as the ECBs for some time. So where does the euro go in this environment?
A great question. We're seeing a lot of our European importers as well asking the same question: where to from here for the Aussie-Euro? Euro dollar itself, it has been on a strength for the last couple of months. Some people say it's going to be the next thing to replace the US dollar. I don't believe that story, but in saying that, it's definitely seeing a lot of demand in the last few months. People are moving away from the US dollar transitioning into euros. We saw the ECB have come out and said that they're not going to be cutting rates any further. They're going to be on a holding pattern as well. But in overall point of view, investors need to park their money. Hedge funds need to park these money. The CTAs need to park their money. And if not the US dollar, they need to find a place where it's going to be still liquid enough where they can, get in, get out without any sort of hackles. Now, technically speaking, we have traded at above the 115 handle. The last time we were here was back in November 21. Now, if we've broken it once, now we're waiting for a conviction. Sorry. If we do see a clean break of 115, I think the next pit stop for the euro dollar is going to be $1.19 or the $1.20. I think we will see that before the end of this year. What that all means is that Aussie-Euro traveling to Mykonos for most people is going to get harder. I think Aussie-Euro is going to get below sub 55 handle as well. So we are in chat with a lot of importers, and we're explaining to them, look, this is the time to understand how to structure risk, look at short-dated hedging. There's opportunity there to protect this business from, rather than just waiting on the sidelines and waiting for the dollar to recover.
All right, I'm not heading to Mykonos, are you?
No, I wish I was. Steve, just a PS to all of that. I was chatting with a guest earlier this week who said it's easy to lose sight with all of the negative headlines that are coming from many parts of the world, if we're honest. Lose sight of July 9th, that tariff D-Day. There's still huge risk around that day because we've got so much unresolved still. Do you agree?
Yeah. 100%, I agree with you. There's so much distractions happening at the moment. I mean, again, we thought, I'm partly to be blamed as well. We're going from being tariff specialist to Middle East war specialist, now all the way back to tariff specialist. So a lot of distractions happening in the market. One thing we try to bring to our clients or customers' attention is providing them a balanced view. We bring in the big picture. We explain to them, hey, look, it's not about today and tomorrow. It's all about what the longevity of your business looks like. And as you're 100% right, we have the tariff deadline. But if you were to use past history as your measure over here, I think Trump might come to some sort of agreement before D-Day. He might extend the tariff deadline, or he might say, you know what, we're all friends. Let's party.
Yeah, we've been experts a lot, haven't we? We've been vaccine experts, pandemic experts. All right, Steve, thank you. Have a great weekend. Steve Copeland, Skanda FX Director. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.